This show is sponsored in part by St. Germain Catering, a woman-owned business that is professional in every delicious detail. And Fairfax Social Sports, Northern Virginia's largest co-ed men's and women's adult sports league, with over 32,000 players who participate in flag football, softball, basketball, and other adult sports. And finally, the Ruddy Law Firm in Fairfax City, Virginia, a law firm that provides legal services in the fields of business, probate, estate planning, and elder law. Welcome to the Probate Nation. My name is Richard Ruddy, and I'll be continuing today as your host of How to Probate an Estate. We continue our journey on the probate train with a discussion of some of the initial tax steps you will need to take to continue the probate of the estate you are administering. This discussion is important both in your efforts to collect or marshal the assets to be probated, as well as to meet the tax obligations of the decedent and the estate, and finally in your accountings to the Commissioner of Accounts. There's a lot to cover to keep the probate train moving along, so let's get started. With us today is a local CPA who has been in private practice for 26 years with the firm of Steitley & Carstetter, PLLC. His practice encompasses tax and accounting for small businesses, estates, and individuals. In addition, he is a certified valuation analyst, and in that role provides business valuation services for business and tax purposes. Please join me in welcoming CPA Frank Steitley.
Thank you, Richard.
Welcome. Thank you for coming today.
It's my pleasure.
You know, the estate, when someone dies, the estate becomes a separate taxable entity and has to begin to make some important tax moves. Mm-hmm. One of the very first things that I think comes up is what is going to be the tax year that the estate is going to have to use. Mm-hmm. Can you talk a little bit about how that works and how you determine that tax year?
Okay. Well, first of all, you've got to figure out what the right tax year is going to be for the estate, and the IRS gives you pretty wide latitude in how you do that. The most common tax year for an estate is to just use the calendar year, just as you would for your personal income taxes. However, that's not the only choice. You can choose a tax year that ends anytime up until the month prior to the date of death. For example, if someone passed away on September 15th, you could have a tax year as short as September 15th to September 30th would be the end of the tax year, or the longest tax year you could have would run all the way to August 31st of the next year.
Okay, very good. So, the actual tax year begins on the date of death?
That's correct.
Okay. And so, continuing with that sort of discussion, is there a particular strategy as to what tax year one should select?
I like sticking with the calendar tax year as much as possible. That's the way brokerages and financial institutes are going to record and report the income to the IRS. In some cases, it might be better for beneficiaries to pick another tax year, but in that case, you've got a lot of record keeping to do on your own to convert the income from the calendar year to the tax year of the estate.
Okay. So I know you mentioned that it might have some impact for beneficiaries, and we're going to talk about that a little bit further in this particular program. So how do you actually select your tax year with the IRS?
Well, when you obtain your federal employer tax identification number, there's a block on that form that says, what is your tax year? And at that point, you've told the IRS what you'd like your tax year to be.
Okay. And so we're going to come to that form in just a second, but when you make that selection, are you bound by that selection, or is there any latitude to change your mind?
You're bound by it, although you can ask permission of the IRS to change to a different tax year later.
Okay. So one of the very first steps then, in administering the estate, after you have decided what tax year is, you need to get a tax identification number, often referred to as an FEIN. So how does one get that?
Well, there are two ways, Richard, to get a tax identification number. One of them is to fill out a form called an SS4 form with the IRS, and the other one is to fill out an online application with the IRS at irs.gov.
Okay. So on our screen, we're going to show our viewers the SS-4 form, which is the application for employer identification number. And just for a couple of minutes here, if you could kind of walk, we've numbered this form so that Frank could walk you through some of the key things you need to fill out. And Frank's advice has been to me when we talked about this in advance of this show is that even if you're going to apply online, he recommends that you go ahead and complete this form in advance so you have all the information in front of you. So that way things will go more smoothly if you do an online application.
That's correct, because you don't want to be in the middle of the online application searching for an answer that you don't have. And all the answers are on the SS4 form.
Very good. But let's just take a quick look, Frank, and look through that form as we have some things. So number 1 on that form, we put down the name of the person who has died. Is that correct?
Yes. Okay, and it could be as simple as the estate of John Smith.
Okay. And walk us through 2, 3, 4, and 5 real quickly.
Number 2 is the name of the executor or the person who's speaking for the estate. Number 3 is the mailing address for the estate, which is typically going to be the executor's address. You're not looking for the prior address or the last address of the person who passed away. Okay. It's where do you want the IRS to send information.
Sure.
And if there's a street address that's different from the mailing address, that's number 4 indicated on the form. And number 5 is just the county and the state where the estate's located.
Now, number 6, that's the next area we have to turn to. We're going to go ahead and check the box. They ask the type of entity, so we're going to check the box that says other, and then what do you put in there when they ask you to specify?
Decedent's estate.
Decedent's estate. All right, then number 7, what goes in that particular
Number
box?
7, the reason for applying, you check the box other again and put in decedent's estate.
Very good. Now, number 8 and 9. That's 8. Number 8 would be the date of death.
That's
of the
correct.
decedent. And then number 9, which is actually question 12. Tell us a little bit about that, because that relates to our first discussion.
Well, our first discussion was what day do you want the estate's tax year to end, and that's what this area 12 or box 12 is. That's coded as 9 on our form here.
Very good. So you pick the month, and that's the one that you make your decision you become bound by unless the IRS gives you permission to change.
That's correct.
So you do want to think about that as you go ahead and get this tax ID number from the very beginning.
Yes.
And then the balance of number 10, in that area there, you get a chance to fill out information about anybody you'd like to get information about the estate that the IRS can talk to, and then you sign and go ahead and submit that. So the online application asks for the same type of information. There's one other piece of information that they ask for that's not on that form, as I recall. That is the executor's Social Security number.
That's correct.
That is the one thing that would be an additional piece of information. Well, now we've gotten our tax year, we've got a tax ID number, but we do need to let the IRS know that we're in charge, and there's an actual way in which to do that. What form does the IRS ask you to use in order to let them know
the IRS asks you to fill out a Form 56, which is also a form that's available on irs.gov. However, there's not an online version of it, so you have to physically fill out the form, and there are some items that have to be attached to the Form 56.
Okay, so we've put that form up on the screen, and we're going to take a look at the first page there. And Frank, I'm going to ask you again just to briefly kind of walk us through some of the key things that need to be filled out.
Okay. Number 1 is the person who passed away.
Right.
And if you go on across that line, the identifying number is the FEIN, or the tax identification number that we obtained for the estate, as well as we'll want to put in the decedent's Social Security number.
Okay.
We're also going to put in the address of the estate here under number 2,
and that'll be
which would be the executor's
fiduciary's address. Okay.
Yes. And then number 4 is the fiduciary's name, which is the name and the address of the executor.
So down in where we've identified 5, since this is an estate, we would be picking either A, B, or C, depending upon how you were qualified to be the executor or administrator of that estate. Then in section B, which we've identified with number 6, tell us the kind of information we're going to be checking off in those boxes there.
What we're telling the IRS is what types of taxes we think might apply to the estate, and qualifying to be the person who is qualified to talk to the IRS about these. Under number 3, the most common ones that you would have are just the first 3: income tax, potentially gift tax, and potentially estate tax in the case of an estate. And under number 4, the 706 series, 709 potentially, as well as the Form 1040 and the 1041 form.
So those are the boxes you would check.
Those are the boxes
to mirror
you
up
would
with
check.
those things
Yes.
in number 3. Okay, and then let's turn back to the second page of Form 56, And we've identified in Part 3, number 7, what is all that information there that the IRS is asking for?
The IRS is asking for just who qualified the executor to be the executor, which is typically going to be the county.
So the local probate office.
The local probate office.
So if you got qualified in Fairfax County, you'd have your certificate of qualification. You put the information down there about that particular jurisdiction, and then you'd have your fiduciary number and so on that you got when you got qualified.
That's correct.
And you sign this and you go ahead and send this off to the IRS. And at that point in time, the IRS knows that you are the person that can speak on behalf of the estate.
That's correct.
Is that correct? So the next thing we want to talk about is, and again, this is something we encourage folks to do early in the administration process, is as part of the reporting for income tax purposes for an estate, we file that on Form 1041, which we're going to talk about in a second. If there are distributions that are made from the estate, we may need to track those out to the beneficiary. And one of the key pieces of information that we need, or the CPA typically needs in connection with doing that, is the tax ID number of the beneficiary. Is that right?
That's correct. And
so how do you capture that information, Frank?
Well, what you do as an executor is you obtain a Form W-9. Again, this is another form you can get on irs.gov, and you give the W-9 form to all of the beneficiaries of the estate and ask them to complete them. And what we're really asking for here, 99 and 9/10% of the time, is for their name, address, and social security number.
Right, and we just posted quickly on the screen Form W-9, but I think it's pretty clear where all that information would go: name, address, and social security number. So as we now have collected all of that information, the estate has its own tax year. It's going to have to report its income and expenses, and there's a particular form that we use to do that. What is that form?
That's correct. That's called a Form 1041 form, which is an income tax return for an estate, as opposed to a Form 1040, which is an income tax return for an individual.
Okay, so again, up on our screen, we're going to show the first page of Form 1041, and it does look a lot like the Form 1040, although there are some things that just don't apply to estates. But would you walk us through some of the things that need to be reflected on this form?
Sure. Or perhaps the most important box is labeled number 1 here, and that's that we want to check that this is a decedent's estate. It's not some other type of trust that we're filing the form for.
Okay.
Number 2, if we've selected a calendar year as the tax year, there's nothing we have to fill out here. If we've selected a fiscal year that's different from the calendar year, we have to tell the IRS the beginning and ending dates of the fiscal year.
So in our example, when we had that discussion early on, if our fiscal year was ending August 31st, then up there we would actually put in the information that says it begins on September 1st and ends on August 31st.
That's correct.
And that way the IRS would know.
Yes. Then we have to give them the name of the estate, for instance, estate of John Smith, the name and the title of the fiduciary, which would typically be whatever your name is, and your title, which is most likely going to be executor. The employer identification number is the number we got from the Form SS4 or that we got online. The date the entity was created is the date of the person's death. And then after that, the form is somewhat similar to a 1040 form, as you noticed. We have a section 5 that lists all the different types of income for the estate.
Okay.
And we have a section 6 that lists all the deductions for the estate. And in section 7, we have a line 18, if the estate has distributed any income to the beneficiaries. This is the amount that the beneficiaries will pay income tax on.
Okay. So that we would take that. Now we go to page 2, which is going to show up on your screen. You'll see where we mirror up in the discussion about Schedule B, which is called the income distribution deduction, which I think is what you're referring to.
That's correct.
And so in that section B, that's where you would calculate, what that deduction could be based upon the type of income that was actually earned.
Yes.
So when we get that deduction, though, that means that we produce this K1, which is the form that actually tracks the information out to the beneficiaries. And that's the form where we really do need that Social Security number, which is why we have that W-9 completed early on.
Yep, that's correct. The K-1 form is actually part of the 1041 form, but it's also something that once you file the 1041 form that you give to the beneficiaries of the estate so they can complete their personal income tax forms.
Okay. And of course, if you're at the end of an estate, if there's a large final deduction of some kind, a loss of some nature, can that be passed out to the beneficiaries too?
Losses for things like capital losses that have not been able to use by the estate because you have a limitation as to how much you can use in a given year will pass through to the individuals on a K-1 form.
Okay, very good. Talk for a second about, so we've got our tax ID number, we've notified the IRS that we exist as a fiduciary and that the estate is getting going. We're doing our work to get connected with the beneficiaries, get their tax ID number. We know what form we're going to have to use to fill out the report of income, but one of the big things we're going to have to figure out early on in this process, and the earlier the better, is has the decedent really done all their tax compliance work before they passed away? So let's talk, and so I want to pull this up on the screen that one of the forms you're going to have to give to your local commissioner of accounts is called a tax certificate that will get accompanied the fiduciary accounts. And I want to pass along that some reporting to commissioners, they will require you to fill out this tax compliance certificate every time you file an accounting. If in Fairfax, the requirement is that it must certainly be accompany the final accounting. But on that, you make certain certifications to the commissioner about both federal, state, and local taxes. So what we're going to do now is talk about what is the form. There is an IRS form that we can use. Tell us about what that form is and how you would use that to go ahead and figure out if the decedent has actually done all their tax reporting.
The form that you use to ask the IRS if all the tax returns have been filed and the taxes have been paid is called a 4506T. And again, that's available at irs.gov. There are really two purposes for this request for transcript of tax return. The first one is you want to know that the decedent filed and paid all of his tax liabilities, because to the extent that they did, those tax liabilities are potentially part of the estate. The other thing to keep in mind is that in the year that the person dies, there will be a final personal return as well as an estate income tax return. So there are actually going to be two returns filed in the year of death. The second purpose of this transcript of tax return is to be able to tell the county that you filed everything with regard to the estate.
Okay. So this is Form 4506-T, which we have posted up on the screen as well, just to give you a quick view of that. And it's relatively straightforward, but you're giving the name of the decedent in number 1, and in number 2 you fill in their Social Security number, and then give the address, the current name and address. That would be the address of the executor.
Yes.
And then down in 5, in the section which is 6, 7, and 8, you check off the kind of information you want. But if you're looking for transcripts, you would be checking which boxes?
It would be a 1040 would be the transcript requested.
In number 6?
In number 6, and you would want a box B, an account transcript at the very least. And what that tells you is whether or not there are any balances due and whether the returns have been filed.
So in that section that we would want to check off number 6, put 1040 down, and then in B, check that box so we get that information.
That's correct.
Very good. And then we have to fill in a number in number 6 down below, which we've identified. We would fill in the years we want to be covered.
Yes.
Okay. And we sign and go ahead and send that off, and that will start a process by which we can gather some very, very important information. So now, having done that, there are some other things you can do along the way as well. Okay, so we're going to be filing our tax returns both as a fiduciary and any final 1040 returns that are due. But we want the IRS to act as promptly as we can get them to act, because they do have a long time period in which to act on a filed return. So is there a form that we can use to ask the IRS to move things along?
There are a couple of forms we can use to ask the IRS to move along. But the first thing to keep in mind is that speed is a relative term with regard to the IRS. And the forms that we're going to use for that, there's a form called a 4810 form and a form called a 5495. And the 4810 form is a request to the IRS to make a prompt assessment of any taxes that are due and to notify us if they're intending to audit the Form 1041. And what this does is it cuts down the time the IRS has to look at a tax return from 36 months to 18 months. So you can see it's not exactly speedy, but 18 months is certainly better than 36 months.
It is indeed relative.
The second form, the 5495 form, is a form that can be very important to the executor, because what it does is it asks the IRS to discharge the executor from any personal liability with regard to any taxes of the estate. And what that means to the IRS is that they want to know before they discharge you from having personal liability that all the taxes have been paid and that all the forms have been filed.
Okay. So the 4810 is a form that we would complete and file early on in the process as we get, fiduciary returns filed and all the final 1040s are filed. But 5495 is one we would do closer towards the end of the administration process.
Yes, and the IRS it's difficult to hurry the IRS to do this 5495 form. As you can imagine, they're saying everything is fine, we can't come back at you at this point, so they're sort of reluctant to process that in a big hurry.
Right. Now, we posted, I think, the 4810 form on the screen, and we did not take the time to go through that. It is a somewhat complicated form in the sense of information it seeks out, but it's one that you should undertake to file, as Frank has indicated. Okay. There are also state and county taxes we need to address as well. So how do we go ahead and get tax clearances from Virginia, for instance?
Unfortunately, it's not quite as simple as this with the IRS, where you have a nice form. With the state of Virginia and the county, you have to file what's called a request for prompt assessment. And those are literally the words that you use. And typically, I enclose a copy of the 4810 for the state and the county just to get across to them what we're trying to do.
I understand. And then on the county level, we would write to the local director of taxation or Department of Taxation and ask them for a similar kind of inquiry.
Yes.
To respond as well. Okay. Well, we've covered a lot of tax information today, Frank, and I'm sure some of our viewers, their eyes are starting to glass over. But I think you've done a great job, getting it reduced down to a few action items. Can you have any final thoughts or suggestions you'd like to pass along in the last couple of minutes here to our viewers?
My final thought is, don't be afraid to ask for help. It's always easier to file these forms correctly up front than it is to try to fix them after the fact.
This is very true. I know our Commissioner of Accounts has encouraged folks, because many of the probates in Fairfax are done by non-professionals. But his observation has been that sometimes it's just better to be the CEO who oversees with the help of people who are competent professionals, rather than to be the worker bee who tries to do some of the work that maybe is beyond your capacity, given that taxes are not a necessarily intuitive process. So well, I want to thank our guest, Frank Steitley of Steitley & Carstetter in Chantilly, Virginia, for taking the time to talk with us today. As you get started with the probate of an estate, each of the above topics needs to be addressed and acted on. And Frank, you did just a wonderful job of translating mounds of tax rules into the following simple, easy to understand action items, which are: you need to select a tax year for the estate, and that decision is something that is to some extent is set in stone. You need to obtain a federal employer identification number, and that can be done either by paper application or you can do it online. And you need to get the tax identification numbers of all beneficiaries of the estate, because that's going to be needed for tax reporting purposes. You then need to notify the IRS that you are acting as the fiduciary for this estate, so they will speak to you and exchange information and notify you about problems that arise. And finally, you need to start the process to request confirmation from the tax authorities that the decedent has paid all of his taxes to that point. And you want to make sure that they're paid, and if they're not, you need to make arrangements to get those paid. I encourage all executives to follow Frank's suggestions. Again, Frank, thank you so very much for your time today and for this great public service you've done for our community.
Thank you, Richard. It was my pleasure.
This brings us to the conclusion of our show today on initial tax considerations in the probate of an estate. We hope you found the discussion informative, but caution that navigating the tax laws in the probate of an estate should be done with the guidance of a tax professional. Clearly, there are many important tax decisions to make and actions you need to take early in the probate of an estate. Taking the proper tax steps at the outset of probate will make the probate administration, eventual distribution to beneficiaries, and the wrap-up of the estate go much smoother. You've done a lot since you started with your initial probate qualifications at the probate office. You've given notice to beneficiaries and filed affidavits with the court to let you know that you've done that. You've also learned and filed the inventory with the Commissioner of Accounts to let them know what assets you have. And now we've taken some important tax steps to get yourself set up to administer this estate properly. So the probate now continues on its way to the next stop, where we will review the steps you should take in collecting or marshaling the assets of the estate. On behalf of myself and the entire Probate Nation, thank you for visiting with us.